you through the three main talking points. One is the supply chain impact due to geopolitical tensions, how they plan to navigate it, demand in Africa, West Asia, Turkey region, and the outlook on demand in India. To break this down, we have with us Natarajan, Managing Director and CEO of the company. Thank you very much, sir, for joining in. So let me start with the demand question, which covers the various geographies that you operate in right now. In Q1, you had a volume growth of close to about 5%. I think when we spoke last time, 6 to 8% was what you were hoping for in terms of a volume growth guidance for full year. Now, given the uncertainties in North America, the slow start to Q1, what is your guidance for the full year on volumes and EBITDA per ton?
Yeah, good morning. So thank you for having me on the show. Given that from the last time to now, the change has been in terms of the way the India market hasn't really fully recovered, although we see some green shoots in terms of certain policy decisions that the government has taken. The latest one being the GST rationalisation. That augurs well for us, and that can be a real booster for the demand in India. So that's a good news. We do expect things to start looking up from H2. America, we had a challenge because of the tariff uncertainty. Many of our customers were going slow on the ordering because they weren't clear as to which way things would go. That continues even now, and we do expect things to be much clearer in the next quarter, and that should come back. Rest of the world, other countries are doing pretty well for us. Europe is doing well. Latin America is doing pretty well for us. Africa, Middle East has been flat, and that was more due to the supply challenges we had due to the geopolitical situation. That's improving now, and that augurs well for the coming quarters for us.
Right, Mr. Natarajan. Good morning. This is Vinny joining in the conversation. So that volume number, what could we be expecting in FY26? 8% around that mark is what we could watch out for? No,
we would further India market needs to really pick up. And that currently India growing at only about 3 to 4% for our customers as well. That would be a difficult one to achieve at the higher end. I'd be happy if we are able to touch the lower end of the band of 6% with India coming back. So I am hopeful about that happening.
Okay, hopeful about that 6% at least happening over there. Also, just in terms of freight rates, what is the outlook there as well? Given that there were some issues in terms of freight rates increasing there, container availability was also an issue. Has that started easing off? Has that started becoming better? And overall, how is that impacting your cost story right now?
The container availability, because of the tariff, the yo-yo situation in tariff, you have containers getting pulled in by China, some container unavailability in some sectors has been a challenge, but it is much better than what it was, say, in the previous quarter. Quarter 4 was pretty bad for us of the last year. It's much better, it's improving. Freight rates are started increasing in line with the demand surge that has happened to probably try to beat the tariff setting in. But that we see as temporary because things do, based on our discussions with the shipping companies, things should start getting better. But availability is certainly much better. We don't see much issues moving forward on the supply front.
India demand, I think you said was 3 to 4% in Q1. And you're hopeful for things picking up in the festive season. What is the volume growth for India that you anticipate?
India, I think we should probably should be in the zone of about 5 to 8%. But second half is what we need to wait for.
Got that. And US is, I think, 8 to 10% of your revenues. Is that correct, Mr. Natarajan? Can you hear me? Okay, we seem to have snapped that connection a bit. We'll try and reconnect, but that's Galaxy Surfactants saying that in Q1, the volume growth was about 5%, but because US is facing some challenges, India volume growth was only about 3 to 4% in Q1 for the full year. They're hopeful if the company can achieve a volume growth of 6%. Last quarter, they'd given a guidance of 6 to 8%. Then to some of the analysts, they said 4 to 6% is the kind of base range that we're working with. But if things pick up, as the management was telling us, Mr. Natarajan, they can push towards 6%. So we wanted to get into a little more detail about North America. US is 8 to 10% of your revenues? Is that correct?
It's about 10% of revenues, you're right.
US, okay, 10% of your revenue. And you spoke about ordering being very slow on account of tariff uncertainty. So what was the volume growth in US in Q1? And what are you expecting? I mean, is this year going to be a washout? And if that's the case, what happens to your margins? Okay, we'll, try and... Mr. Natarajan, can you hear me? Okay. We'll reconnect.
Yeah, I think we'll reconnect with them. It will be important to know also where, the company's margins are going to be going forward as well. But a lot of development on US front right now, like we mentioned as well. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be coming back with more updates after the break.
Welcome back. We managed to reconnect the line with Galaxy Surfactants. K. Natarajan, Managing Director and CEO of the company, is here with us on Chartbusters. Mr. Natarajan, we were trying to understand the US business. That's 10% of your revenues. Orders have gone slow. In Q1, was there any volume growth? And what is the plan? Is there a risk to your margins if this year turns out to be a washout?
Yeah, so Q1, we did have a volume growth. It was probably about 7 to 8%. We do expect it to go up in the coming months. We're already seeing that happening in this month. More importantly, I think what is required is the premium specialties that need to go up. That actually slowed down. We are seeing things picking up, and it should be on a good track in the coming quarters.
But you spoke about how customers are cautious and orders are getting pushed forward in the US.
Because they weren't too clear about what would be the tariff and what would be the demand for their products, given that it's going to be inflationary. Now, once they have come to terms with that, we are also giving solutions in terms of how we are able to get around in terms of reducing the tariff impact for them. So there's a good amount of negotiation, discussions happening with customers, and that's proceeding well. We're also looking at how do we pivot towards our other regions in the rest of the world to be able to soften the impact.
But you're saying you're going to soften the impact for your US customers, which means that if the tariff is settled, say at 25%, not at 50%, you will be absorbing the burden?
No, not exactly, because we also have facilities in Egypt. We'll need to see how we are able to be managing with some supplies happening from there. So various options are being worked out to ensure that we are able to keep our customers, engaged, and we are also able to have no margin impact.
Okay. And just in terms of your supply chain side as well, how is that shaping up? Would that be a concern? What are we watching out there?
No, supply chain, not much of a concern now. We did have an issue in the first quarter where one of our key oleochemical vendor had a huge disruption because of natural gas supply getting impacted. All that has gotten better from July. We don't see any significant challenge in the supply front moving forward.
Okay, Mr. Natarajan, out of time. Thank you very much for joining in. That's the word coming in from Galaxy Surfactants. Let's move on.